Good afternoon, dear colleagues. I'm very happy to see you. So we're starting the press conference by the Governor of the Bank of Russia, Elvira Nabiullina, and the Deputy Governor, Alexei Zapotkin. And to begin with, we will hear the statement of the Governor following the Board of Directors meeting. Please. Good afternoon. Today, we have made the decision to cut the key rate to 15% per annum. As we expected, price growth has slowed down following its temporary acceleration in January. The response of inflation expectations to the increases in VAT and fees has been moderate. Consumer demand is cooling. The economy is approaching its balanced growth path. This has enabled us to continue easing our monetary policy stance. However, there are two important factors of uncertainty which will influence our future decisions. These are changes in the external environment and adjustments to the fiscal policy parameters. This calls for a cautious and prudent approach to decision-making in the future. I would now dwell on the reasons behind our today's decision. Firstly, inflation. In February, current price growth rates declined back to the levels of second half of the previous year. This confirms our preliminary estimates that higher VAT, excise duties and fees were passed on to prices mainly in the first few weeks of 2026. What is essential is that measures of underlying inflation also indicate moderate price pressure in February. As we noted earlier, it is impossible to completely strip out the effect of increased VAT from the calculation of most of the measures of underlying inflation. Therefore, February is more illustrative of underlying price growth than January. Overall, according to our estimates, current underlying inflation did not speed up at the beginning of the year and stays in the range of 4 to 5% in annualized terms. The impact of high taxes on households and businesses' inflation expectations has turned out to be short-lived. In February-March, inflation expectations returned to last year's averages. However, despite the notable slowdown in actual price growth over the previous year, inflation expectations remain elevated, which is a matter of concern to us. High inflation expectations are one of the reasons why we need to be cautious when cutting the key rate. Secondly, the economy. High-frequency data for the beginning of the year demonstrate cooling in domestic demand, especially consumer activity. As we expected, an additional contributor to this was expensive purchases partly rescheduled for the end of last year when people were seeking to buy some goods before the increases in VAT and the vehicle recycling fee. Another indicator of moderate demand dynamics in Q1 26 is current estimates in business surveys. A considerable decrease in estimates at the beginning of the year was reported by small and micro businesses. In the next few months, as the effects of intertemporal redistribution of purchases dissipate, we will be able to assess the sustainability and magnitude of the deceleration in consumption growth more accurately. Developments in the labor market are consistent with the earlier trends. Unemployment stays at its record lows. Nevertheless, surveys show that staff shortages have been easing gradually, with companies' recruitment and wage indexation plans moderating yet further. Fixed capital investment edged down as of the end of 2025, while staying close to the record highs achieved in recent years. Over 2025, fixed capital investment totaled 42.5 trillion rubles, which is almost one-fourth more than in 2021, if assessed in real terms, that is, adjusted for accumulated inflation. However, the situation is still uneven across industries. Investment activity has remained high, primarily in manufacturing and services, including owing to government support and import substitution. Investment plans for this year are more moderate. Nonetheless, business surveys show that there are more companies planning to build up rather than reduce their investment and production capacities in 2026. According to our estimates, the economy's production capacities have continued to grow, and given the currently observed moderate dynamics of demand, it will align with the supply of goods and services in the next few months. Thirdly, monetary conditions. conditions. They have eased somewhat while remaining tight. Interest rates in the main financial market segments have continued to decline gradually, driven by the earlier key rate decisions. Credit growth stays moderate. A temporary acceleration in retail lending, which was attributed to heightened demand before the change in subsidized mortgage terms, has been expectedly followed by a cooling. Corporate lending has returned to moderate growth rates after the seasonal effects of budget spending dissipated. Concurrently, the propensity to save remains high compared to historical levels, while declining slightly. Its decrease is natural amid monetary easing and is very smooth. The growth rate of monetary indicators is currently close to the level observed over the period of sustainably low inflation. Now, I would like to speak of external conditions. They have been in the limelight in recent weeks. The situation in the Middle East has been considerably influencing global commodity markets. The resulting effect on the Russian economy will depend on the duration and scale of these geopolitical events. On the one hand, in the short term, the domestic economy will be mostly influenced through higher prices for crude oil and other Russian exports. This is a factor supporting export earnings and the ruble. On the other hand, in the longer run, the situation in the Middle East might adversely affect both global demand and investment growth prospects, accelerate inflation in economies importing energy commodities, and disrupt supply chains. Actually, this is yet another supply shock that will influence costs worldwide and to a certain extent pass through to prices in the Russian market. Additionally, problems in logistics may have a negative effect on the quantities of Russian exports. So far, it would be premature to give any estimates of the overall effects of external events on the Russian economy. The ruble has weakened over the past few weeks, but its exchange rate is hovering in the range of the previous year. It is too early to speak of a clear trend forming. The exchange rate was not a determinant factor for our today's decision. I will now speak of risks. As before, we consider that pro-inflationary risks prevail. The risks of second-round effects of the increases in VAT, excise duties and fees, including their impact on inflation expectations, have subsided. However, the estimates of future inflation, especially among households, remain elevated. Their decrease might be additionally slowed down by adverse external developments. Risks associated with staff shortages persist. As I have already noted, the external environment is a factor of rising uncertainty. Fiscal policy is another important factor having a notable impact on room for cutting the key rate. Changes in fiscal policy parameters relative to the earlier announced ones might increase or limit the room for lowering the key rate. In view of this, all the parameters are critical, including the configuration of the fiscal rule, the size of the budget deficit taking into account parameters of regional budgets, and the sources of financing the deficit. As we said earlier, the decline in the cut-off oil price provided for by the fiscal rule should lead to a commensurate revision of spending, which is necessary to ensure a balanced federal budget. If this happens, the effect will be disinflationary. By contrast, if changes in the fiscal rule parameters are not accompanied by adjustments to the budget expenditures but only entail higher borrowings, this will require tighter monetary policy, all else being equal. Winding up, I would like to comment on our future decisions. Considering the dynamics of inflation and inflation expectations and the cooling in domestic demand, today we have made the decision to cut the key rate as the result of it. However, the uncertainty associated with the external environment and future fiscal policy parameters has notably increased. We might need time to comprehend how the situation will be unfolding. At the upcoming meetings, we will assess the need for a further key rate cut, but this will not be done as a matter of course. It is our well-balanced and consistent monetary policy that has formed the prerequisites for returning inflation to the target. We will move forward in a smooth and balanced manner so as to bring inflation down to 4% and stabilize it sustainably close to this level further on. Thank you for your attention. Thank you. We will be happy to respond to a question. Please introduce yourself and identify your agency. Marsha, please, in the first row. Good afternoon. TASS Information Agency, Maria Stepanova. Could you please tell us what were the options that you considered today with regard to the rate and what kind of messaging you debated? We had a broad consensus around reducing the key rate by 50 basis points, although there were individual proposals to keep it as it is, as well as to bring it down by 100 basis points. Colleagues, please. Nastya. Anastasia Savelyeva, Interfax Agency. I have a question. Is the discussion going on about changing the fiscal rule parameters to reduce the baseline pricing, or the process of introducing these amendments, specifically reducing the base price, has been put on hold, specifically because of the high uncertainty and the lack of clarity in terms of the main parameters such as the oil price? Do you consider to believe that the ruble exchange rate dynamics are being affected by the fundamental factors? Don't you think that the basic impact in terms of its depreciation was stopping them by the Minister of Finance of selling the currency? Well, the fiscal rule parameters are still being debated by the government. Indeed, I do agree that there is more uncertainty with regard to the crude prices, but the fiscal rule is the important parameter to be estimated in terms of the conservative assessments for the long-term oil price in mind. So it seems to me that this discussion is ongoing, and it is important to calibrate the fiscal rule in such a way, and the cut-off matrix in such a way so that the budget remains balanced. That is a very important consideration that we take note of when deciding on the key rate. As far as the ruble exchange rate and the currency exchange rate impacts are concerned, the recent easing that we saw can be explained by the mix-up of the two factors, which I would refrain from describing as fundamental. The first one, there was a very low price for oil in January, February, and we think that the timing required in order for the pricing effect to manifest itself and the coming of currency earnings is different, so we can now witness the consequences of the low oil prices in January. In combination with the second factor, which is putting the fiscal rule effects on hold, because in a normal situation, if the oil price is lower than the base price, then the currency is sold from the National Welfare Fund, which partially compensates for it, which didn't happen. So that's why we see what we're seeing. But you currently see that the price for the exportable oil is currently higher. So we'll see what will happen with either relaunching or not relaunching various transactions as part of the fiscal rule. Just a short deviation. The exchange rate dynamics recently is a vivid demonstration of the extent to which the fiscal rule mechanics are so important to save the economy from the oil price volatilities. Dear colleagues, please, Igor. Good afternoon. Yet again, thank you very much for the work. Igor Shipko, Media Project, Igor Shipko. My question is related to the external shocks. You quite fairly stated already that we have some concerns that we're facing a lot of uncertainties in the future. I would like to understand, are you already modeling in any way, together with your team, are you pricing in the consequences, and if positive, within which scenario? Thank you. It is quite difficult right now to put anything into modeling because the subsequent effects strongly depend upon the extent to which situation is long-term or short-term. We're rather trying to analyze possible channels via which the impact may come to us. As I said, they're quite diverse. In a short-lived way, it could be the support for the export earnings and consequently the support for the ruble as part of it. However, longer term, if the consequences are strongly felt by the global economy, and such kind of shocks may definitely lead to this outcome. So this could also be related, on the contrary, to the decline of the demand for our export staples. So currently, when we're making our decision, we took it into account as a factor of a seriously growing uncertainty, which is in the meantime quite difficult to calibrate. So we'll see how the situation unfolds. Next question comes from the city of Cherepovets, from Alexei Bogomolov, Gorod Chair Internet Portal. Please. Good afternoon. The Bank of Russia is planning to gradually reduce the key rate. The last reduction took place in February. Today is the second time in a row that you've done it. So in this way, should one expect a gradual reduction of loan rates and consumer, automobiles and corporate ones? Thank you. As of the middle of last year, indeed, we have been bringing the key rate down, and throughout this period of time, the key rate in a cumulative way was reduced by 6 percentage points. And one should mention that the key rate, of course, not automatically, but following the wake of the reduction of the key rate, for example, we see that as far as the market-based mortgage demonstrated almost the similar 6% decline. With regard to the consumer lending and automobile loans, the rates are also going down. But generally speaking, the level of rates there remains, relatively high and unstable. Why? Because, for example, in automobile lending, there are quite a few subsidized loan programs funded not by the governments but by the banks together with the automobile manufacturers. And so at one time these programs have a broad coverage, at other times not, and that impacts the rates. But it seems to me that the trend pointing towards the rates flowing down is there, and that is the result of the declining inflation. Now, in terms of how the market rates are going to be going down further, depends upon the actual inflation, of course, and the reduction of inflation expectations and the extent to which the concerns will disappear. Over the high inflation remaining there. Every time I repeat it, not only the actual inflation, but also the inflation expectations affect the level of rates and the rate dynamics. How does that happen? Let's begin with the deposits. If households expect high inflation to come their way, then respectively the deposit rates should take it into account. So currently, the inflation expectations a year ahead, 13.5%, and so respectively, the deposit rates, in order for people to save, in order for them to be stimulated to save, should be higher. And so quite clearly, the lending rates, including the consumer loans, the ones that you asked about, they cannot be lower than the deposit rates because the loan interests should pay for the interest spending that the banks incur while servicing the deposits. So this slowing process in many ways is conditioned by households having lower expectations. Once again, I shall remind you that the high inflation expectations, they continue to be a concern to us. Dear colleagues, please, Artyom. Good afternoon, Artyom Govoron, Invest Future. As you have already spoken about the external uncertainties from the Middle East coming as uncertainties, I would like to understand what is the way that the oil prices do impact your monetary policies, and how do you take into account these prices so dramatically up these days, not only for oil but other export commodities as well? Crude prices do impact the monetary policy decisions, but that is not the only factor. You cannot look at it separately from other factors. We account for all of them. And one should not forget about the fiscal rule here either, because if the oil price becomes higher than the base price, the cut-off price, then this delta is being compensated for by the national welfare pie. Of course, there is a bit of an influence because most of the export earnings are being sold by the exporters, but to a larger extent, the fiscal rule neutralizes this negative outcome. In this way, makes the situation in the economy and the currency market stable, something that Mr. Zavodkin spoke about. Would you say something? Yes, I mean, everything has already been told about the fiscal rule. It is indeed true. It stabilizes both the effect upon the economy as well as the exchange rate and the monetary policy, both when the oil price deviates upwards from the base level as well as downward. I mean, that is the whole idea of the fiscal rule. It is much more simple for us to run our monetary policy when the fiscal rule works in a predictable manner, in an algorithmically. Now, you also asked about other commodities that we export. As you see, the dynamics there are very diverse, have been over the past several weeks, and of course, we do monitor it, and by the April board meeting, we will have a better understanding of the way this plays out, what is the scale and what is the longevity of the effects which are related to various disruptions in the ships passing through the Strait of Hormuz, because that does affect most of the global supply chains, which are not only limited to oil and gas. Thank you, dear colleagues. Rita. Margarita Mordovina, RBK Agency. Previously, you mentioned that the weakening of the ruble is a pro-inflationary factor, but here you also said that it was not the basic consideration when the board was trying to come up to a decision. Do I understand correctly that at this point in time you do not see from this weakening any risks for inflation, and how much of inflation should be added from the depreciating ruble in order for the central bank to see it as a problem and possibly reconsider its further decision-making and, make a pause? Well, in any case, against all other things being equal, if you consider the depreciation of the exchange rate, this is a pro-inflationary factor. Appreciation is disinflationary, but it is also important to consider the range within which the exchange rate is fluctuating and what businesses put into their business decision making with regard to the exchange rate. Here we see that currently the exchange rate, even despite quite a high volatility within the ranges that it was registered in last year. And alongside with that, we've already told you that we are serving businesses in terms of what is the exchange rate that businesses reflect in their business plans. And in the meantime, we feel that the kind of weakening that took place stays within the framework of the expectation that the businesses have had. So in terms of there being any additional pro-inflationary effect, it doesn't make any sense to really look into it. But as far as the future is concerned, we'll see. But there is no definitive level of the exchange rate past which there ought to we ought to start taking into account as a pro-inflationary factor. It all depends upon the situation that I've described to you and other factors and what the businesses are expecting. Mr. Zavodkin, please. Well, maybe there is another system of coordinates that one may rely upon, and that is to compare the current exchange rate with the one which we had not 4 weeks ago, but longer term, let's say the average one throughout the 2025, against which particular exchange rate the economy was existing in 2025. Let me remind you that throughout 2025 it was 83.4, currently it is 84, so approximately in the same place. The average ruble equivalent to RMB was 11.6 last year. Currently, at the Moscow exchange, it's 17.2. I mean, there are changes, but it's not the kind that should be believed to be abnormal. Of course, if you consider the outliers, then you will see that only sustainable and solid changes in the exchange rate do impact inflation. But in that particular fashion, there is nothing to really discuss. Thank you. Dear colleagues, Zulfiya, you're for the first time here at this press conference. Zulfiya Hamidova, RIA Novosti. Elvira Sahibzadovna, in what way the Minister of Finance sequestration of the budget plans might impact your plans for the key rate changes this year? Thank you. The government continues to discuss changes in the fiscal policy, but not only the changes in the spending are important to us, rather than the general configuration. First of all, the budget deficit, changes in the fiscal rule, the cut-off price, all of this should generate an effect. If expenditures go down, something that you are referring to, so if expenditures do go down, but if the revenues go down even faster and further, and the deficits will be growing and it will be funded via an additional borrowing, that is the factor that will strengthen inflation and that will require a higher key rate. Now, on the contrary, if the expenditures go down and the structural deficit stays the same, then essentially that is a neutral thing for the key rate against all other things being equal. If the deficit reduces, that will give us more room for a further easing of the monetary policy. Thank you. The next question comes from the city of Oryol, from Elvira Nabiullina. The Oryol Pravda newspaper. Thank you. Good afternoon. The central bank has always been saying that it's not the time to do big purchases. One should rather wait for the reduction of interest rates and inflation to go down, but the inflation has already been going down, and the interest rates have also been going down with regard to the deposits and the loan. Now, when the time finally is going to come to make big purchases, well, every family decides for itself whether to buy or to save, depending upon its needs, its life's circumstances. And we all understand it's far from always being possible to postpone certain things. If you get a baby in the family, so you have to spend certain amounts, but many big purchases you indeed can choose whether to do it today or maybe a year later, and the key rate here plays an important role. As you've seen, we are reducing the key rate right now, which means that in terms of the stimuli to spend more gradually will become more in number. But in terms of when and how and what to buy, people do decide on their own. Colleagues, please, Elena, in the one before the last. Elena Fabrishna, Reuters. Considering the fact of what is going on in other countries, Russia seems to be the chief beneficiary of the Middle Eastern crisis. Oil prices are growing, sanctions are being pulled off. Do you agree with that statement? And the second question is related to a higher demand for RMBs. Well, maybe the central bank may give us a comment on this, including the currency swaps. Doesn't central bank believe that it should increase the limit to such transactions? As I said, I shall repeat it. We feel that the consequences from the geopolitical tension in the Middle East shall depend, these consequences, they shall depend upon the further duration and the scale, including the supply chain disruption, and so such influences are very different. There is an effect from growing export revenues, which largely being neutralized by the fiscal rule, although it definitely enables the National Welfare Fund to grow its safety cushion. But there may also come certain negative consequences related to the decline in demand. So once again, the demand for our commodities. So once again, I shall repeat that it's premature to make conclusion say about aggregate effects, because they're going to be spread out in time upon the Russian economy. Now, with regard to a high demand for yuans, no, we have no intention to increase the limit of transactions. Maybe you should say something. Well, the only thing I would like to remind you that a similar situation occurred in September 2024 with RMBs, even more dramatic, and the market was able to really accommodate it. Once again, we would like to remind everybody that our swap instrument doesn't intend us to be obliged to maintain the RMB at a certain predetermined level. Thank you, colleagues. Please, Julia, next to... Good afternoon, Julia Rastorguyeva, Market Power. What will the central bank say about the current lag that is impacting the exchange rate of the ruble? I mean, between the oil price and the actual exporters selling their earnings in currency. That lag does exist. I mentioned, I think, I shall repeat it, it's about 2 months long. It could be shorter, it could be longer, depending upon the logistical considerations. But on average, we believe it to be 2 months long. So currently, we're seeing the consequences of, in many ways, of a lower oil price registered in January. Please, Evgeny. Evgeny Grachov, Izvestia newspaper. Within which period of time one may expect that the uncertainty factor coming from the Middle Eastern conflict may become stronger and impact more the monetary policy? Because you mentioned that one can only estimate this in April, but when this will be stronger and we will see it, and can it lead to a situation that the reduction of the key rate may slow down as a process, and in 2026 later on you may totally reverse your attitude towards the key rate? Well, in terms of when one will be able to assess the consequences of the situation depends upon how long that conflict is going to play out, but definitely one will hardly be able to do it within the next few months unless the conflict ends. As far as the impact upon the trajectory of the key rate is concerned, this separate factor cannot be a definitive one. We take into account changes in different factors because the external conditions are changing. Not only that, even the monetary policy parameters represent the similarly important factor, without mentioning the actual inflation dynamics, the labor market, and we analyze it all in comprehensively. And in April we'll have another core board meeting where we'll further specify and update our forecast, and so respectively, if there is a need, we will also update the key rate trajectory. But there's one caveat. Indeed, the external conditions factor is important. It raises the uncertainty. If it wasn't for this factor, I should say that today we would have been debating more actively reducing the key rate by 1 percentage point. Thank you. The next question comes from Ivan Yeskov, the Gorny Altai, the Mountainous Altai television channel. The travel industry in our region plays a key role, and in what way today's decision may impact the travel activity and the demand for the travel services in the region where we live? Well, I would say that today's decision, considered separately, won't produce any notable effect neither upon the consumer demand and travel activity, but this gradual decline since the beginning of last year, I mean the key rate, creates a more favorable conditions both for the balanced growth in consumer demand and investment. I shall remind you that as of the middle of last year, we reduced the key rate by 6 percentage points since then. But in order for investments to grow, speaking generally about investments, not only into the hospitality industry, of course, what's important to have is the predictability of business processes, predictability of return on investments when investors invest their capital, many more factors as well. And one of them is a stable, low inflation. But this is quite well known from the examples of other countries in this country that the predictable low inflation is the kind of factor which benefits investments. And you see that the inflation has been going down, and it has gone down already to the 5-year record low minimum, I should say. Now, in as far as travel and hospitality is concerned, yes, it is developing quite actively in the Republic of Altai, and we do note that the investment activity into this industry is also quite active into the hotel development and tourism generally, which does reflect changes in the demand structure. There is a high demand for the domestic travel, and we do see that this sector will continue developing further. Thank you. Dear colleagues, Natalia. Natalia Trushina, the Moscow Komsomolets. Several times today you mentioned that the Middle Eastern conflict is related to a great number of uncertainties for the economy, and it's still premature, nevertheless, to talk about what impact it will produce upon the national economy. But can you tell us how long it will stay? If the conflict is not resolved, like already we mentioned, how many uncertainties do you see here in terms of the time frame? 3 weeks, 3 months, post which period you will believe you will be able to assess its impact upon inflation? And could you be more specific? I mean, not just for the whole economy, but just about inflation, because imports are grown prices, but oil and gas revenues are supposed to come, and so right now it's clear at what price they will come. Now, did you check within your mathematical models this particular impact? Is it pro-inflationary, disinflationary? How it may affect your key rate decision in April? I mean, definitely I cannot tell you how long this uncertainty is going to stay. You should understand it. But when are we going to account for this particular factor? I believe that is the question. Because if the situation continues to stay as is, because right now it's impossible to gauge, to assess the impact. If it stays for longer, we will definitely need to start to take into account this effect, although it is not easy to do, because immediately you will see these very diverse trends. Let me not repeat it, disinflationary, pro-inflationary, you name it. So we will take a look at how it is going to unfold, because a lot depends upon the way, upon what kind of commodities are going to be affected by disruptions in the supply chains, if any. And overall, what I can say, this is going to be most probably the supply shock, and the longer it remains, the more pronounced will be the pro-inflationary effects, and that is what we will need to take into account when making a decision about our monetary policy. I mean, the longer it stays, the more pronounced are going to be these pro-inflationary effects. Alexei Borisovich, please. Yes, indeed, this is the supply shock for the global economy. If several million barrels of oils are taken out of the global economy and a certain additional amount of gas, that will very considerably violate and undermine a great number of supply chain operations and the products that are being manufactured, and the way pricing is being done. Of course, the nature of this particular shock is totally different, but you may recall how strong was a pro-inflationary effect coming from the global supply chain disruptions in 2021 during the pandemic. So you can imagine it in the same way. The longer it remains, the more significant are going to be the facts that we would need to respond to via monetary policy measures, both in terms of the global economy and for the Russian economy as well. Thank you. Marina, please. Marina Pimenova, NTV. Since last central bank board meeting, a lot of things has happened out of the positive ones last week. Oscars have been awarded, and the long-time battle of the central bank for inflation and the 4% target really is worth not only just one documentary, but a whole series of sequels. We're now very close to the 4% now, or shouldn't we wait? Should we wait additional 2 seasons for this blockbuster intrigue to get result? Well, you see, I guess there are not too many of those willing to wait to see what will happen for the next 2 seasons. Definitely not us, because people are not happy to see the prices growing. And so we believe, in terms of our weighted decision and balanced decision, in terms of our approach to the key rate, will help us in the forthcoming season to put this final full stop to this whole story of high inflation. Felicia Maria Bitcoin, the output in between different sectors has notably gone down. The central bank monitoring indicators also point to the decline in the business activity. In view of that, I have a question. What is the way that the central bank assesses this data? Is it rather a stable trend that requires the GDP forecast to be reviewed, or are these temporary difficulties? Well, to speak about stable trends is, again, premature. We expect that by the April board meetings there will emerge additional information, actually also with regard to the quarterly itemization of this data, in order to specifically make conclusions about the trends shaping up in the economy. Now, based on the high-frequency data that we receive from the Russian Office of Statistics, we do see that the economic activity is below our forecast for Q1 2026, which was affected by the high base last year, the well-known seasonal factor, because we had several working days taken out of our calendars, and the weather factor also impacted the construction activity. Household consumptions also have been adjusted downward after accelerating in the end of last year. So this is the factor which we continuously refer to, non-food staples. Many people try to buy that well in advance. And as far as other high-frequency indicators are concerned, not only from the Russian Office of Statistics, but also our PMIs and the business environment indicators do show that the slow growth in economic activity in between different industries is very much uneven. But within the forecast, in which we're going to further update in April, we see that we'll be staying at 1.5 percentage points. So we'll definitely be monitoring it very, very intensely. Thank you. Next question comes from Pismina, in writing from Yulia Kotovskaya. Business quarter from the city of Novosibirsk. In the region of Novosibirsk, I believe, like everywhere else, there is a situation that the apartments have been put out on the market, which previously had been purchased with the subsidized mortgage, and the prices are falling. However, as assessed by the market players, this is a negative trend, because people cannot buy the secondary market item because they don't have any money, but there are no subsidized programs for the secondary market. We know the central bank's attitude towards the large-scale subsidized programs because the current situation reflects the concerns of the central bank. But nevertheless, what do you believe might help the secondary real estate market? Maybe the existing family mortgage should also be extended to cover the secondary market. Well, the family mortgage has already been extended, but the secondary real estate market, housing market, in the cities where there is not much housing being built, new housing being built, the key thing that may support the mortgage market is bringing inflation down and bringing down the market interest rates. But the problem that you are describing, if I understood it correctly, what is meant here is that non-personalized subsidized mortgage really pushed up the primary real estate market up, which grew almost twofold, and the prices are very much different from the secondary housing market, real estate market. And so when currently people are trying to sell the housing which they had bought before then using subsidized mortgage, cannot do it using the primary market prices because the difference is too huge. And it's not all about the prices going down, because the statistics that we see do show that the prices in the secondary market haven't grown. Slightly grown by within 4% margin, but nevertheless they went up. So within the segmentation of the real estate market, this is something that we had put out a warning about, because we were telling that people who paid a lot in the primary market using the mortgage mechanism, whenever they will come to trying to sell it because of this pricing gap between the primary and the secondary market, the prices there are going to be much lower. But to be honest, in the meantime, we do not see there being a lot of housing sold out of the mortgage programs. Maybe that will happen because not much time has elapsed since then. Many of the housing which were acquired using the mortgage, the subsidized mortgage, haven't yet been commissioned into operation. And then most of those who use the subsidized mortgage, this is something I would like to believe, bought it not for investment purposes, but to simply improve their living conditions. Those, of course, who bought for investment purposes may indeed have to face this predicament right now. You also mentioned that people are not able to buy housing in the secondary market. Well, we do not see the decline of the number of transactions in the secondary market. It relatively stays stable like it used to be during the previous years. Now, using the mortgage mechanism in order to buy secondary housing indeed has somewhat gone down, that is true, due to the market mortgage rates having been high. But the high interest rates here also is the consequence of large-scale, unindividualized mortgage programs. Thank you. Yakov, in the last row, please. Good afternoon. Yakov Timakov, Expert magazine. In the end of last month, many rating agencies published their reviews about the stability of the regional consolidated budgets, and they noted that, first of all, there's a deficit also consolidated, and secondly, that in order to cover it, the banks in 2025 borrowed a lot of banking loans, making references to the not enough lending from the federal sources. Nevertheless, that demand grew up to 700 billion rubles, if I recall. Now, the question to the Bank of Russia, doesn't it see any worrisome signals in it, at least in terms of the financial health of the lenders themselves, without mentioning such a record high deficit, and that the regions will have to pay off at a very high rate? Well, indeed, the deficits in a number of regions have gone up. We are closely monitoring the situation. At this point in time, that doesn't bring about any concern, but generally I should say that this is quite a normal, everyday run-of-the-mill whenever you have a budget deficit not to be covered by the borrowings via the banking credits, or the regions issue debt securities. The 700 billion rubles that you mentioned, that is... now, speaking from the point of view of its impact upon the lenders, the banks. With regard to the banking credit portfolio, this is really not very much, less than 1% if you take a look at the whole of the banking credit portfolio. That is truly not much. And in our regulation, we have envisaged a higher risk weight with regard to the regions with a higher debt burden. So the banks do take into account. And so the current level of the commercial debt on the part of the banks, if you look at it not with regard to the lending but to the GDP, it remains not too high, 0.6% of the GDP. So it's not the highest one historically. I think about 10 years ago it was much higher. But of course one really should look over the dynamics. You're quite right. Because the dynamics here is important. I think I should also remind you that there are certain safety mechanisms so as to make sure that that particular debt doesn't flow out into certain dangerous areas. In the budget code, it is being regulated. There are certain limitations that are being imposed upon their own income and so their own debt burden. So that should also be doing its work. Thank you. Kirill, please, over there. Thank you very much, Kirill Kashtanov, the Russian Gazette. I've got a question about the market influences. At what particular key rate the market mortgage is going to become active? Do you see any trend? And my additional question is about what kind of the market mortgage rate the Bank of Russia believes to be a normal one. Well, when the market mortgage is going to rebound, it hasn't gone down. It just has, slowed a little bit, because even in the first half of last year, when the rates were the highest, on a monthly basis, about 10 to 20,000 mortgage loans were issued at the market rate. Currently, it has even doubled at this point in time. But of course, we are all talking about the greater market-based mortgage availability. What is a normal kind of market mortgage rate? One may say that this is the kind of rate that evolves in the economy when the economy is in a balance, when the inflation has become stable at the target level. Theoretically, that's the way it sounds, but practically, we've already had a period when we used to have an easily available market-based mortgage offering, when the inflation for several years pegged itself at the level of 4%. And at that point in time, the mortgage rate went down to 9%, 10%. One could even find 8% mortgage interest. What is very important here, let me remind you, we didn't have any subsidized mortgage then. Per 50 cases of market-based mortgage loans, there was just one subsidized. Now there are two subsidized ones ratio to one market-based. And so the subsidized mortgage is displacing the market-based ones. The larger the scale of the subsidized program, the longer will be the period of time when the market-based mortgage is going to be available. So when we compare the situation this year, last year, and back in 2019, when the market-based mortgage demonstrated growth, the number of mortgage loans was approximately the same. It's just that the ratio between the market-based and the subsidized ones changed. So it is very important to reduce inflation and to really keep it at the target level, and of course to restrict such subsidized programs and make sure that there are very much individualized and personalized programs, and for the market-based mortgage to be as accessible and available as possible. Thank you very much, Anastasia Bashkartova, Independent Gazette. Could you please tell us what are the characteristics that the central banks will follow in order to believe that the period of the cooling of the economy, managed cooling of the economy, has ended and has achieved its purposes? And another question, does the central bank believe that the economic cooling has its own accumulated inertia and it will take also some period of time? To what extent, how long the central bank believes such inertia may last? You're absolutely right with regard to inertia. Most of the economic processes do have it, both in terms of going downwards, going upwards. There are inertia processes. We always underscore that our monetary policy manifests itself, acts with a bit of a lag in time, and that is why we're making a decision on the basis of our forecast. That's why forecasting is so important, to make a decision specifically considering such an inertia. When one would be able to state that we have come to the stable balanced growth trajectory, when the inflation will be in a stable way around 4%. Not that it will just touch upon 4% threshold, but you will see for a certain period of time that will stay within 4%. That may take a few quarters as a minimum with regard to the stable inflation components. But again, speaking about our vision for the future, we see that the economic growth in 2027 is going to be higher than this year. Thank you, dear colleagues. Are there any more? Yes, Anna, go ahead. Good afternoon, Anna Gromova, Anna Finance. I also have a question about the availability and the possibility to buy new housing for the people who are not entitled to the family mortgage. We are very happy to see that there is a gradual decline in the key rates, but right now, very much in demand, the form of buying a housing is to pay in installments, and that the share of such installment payments in between different developers is still quite high when selling housing. And as of April 1st, they introduced certain restrictions for the duration of installment payments when doing it via marketplaces. And with a lot of surprise, I found out that the same kind of restriction will be related to the acquisition of new housing. So could you please tell us, would it be possible to buy apartments and housing post 1st April in different installments without being limited to 6 months period? Well, you were quite correct in phrasing it in your question that affects only the installment payment period being offered by the marketplaces, because such a restriction is only possible if a housing is being acquired through the installment payment operator via a marketplace, which is almost a non-existent thing. Now, when buying a housing, installment payment conditions is totally different. It is being made available by the developers, and it is not regulated by law. On the one hand, you may rejoice that it doesn't fall under such restrictive measures, but on the other hand, this lack of regulation, we believe, is quite detrimental, and we should really eliminate this loophole, because unregulated installment payment period, on the one hand, it looks like something beneficial to people, makes it possible for them to delay paying the full amount if they are not able to pay everything right now. But that also creates additional risks. What kind of risks? That these are the risks both for the buyers as well as for the developers. No, for the buyers, what kind of risks these are? The installment period payment by the developers, we analyze the market, is being given from 6 months to 24 months. Now, what does it mean? It means that after this period is over, I guess an individual will end up having a mortgage loan. But if it won't happen, because the creditworthiness of such an individual hasn't been tested. The bank wasn't involved in this process. The bank may reject or refuse to issue such a loan if he cannot measure. So how does that, what such an individual will do? For the developers, that also entails risks, because a buyer may refuse to accept installment period term, not financially being strong enough. And so what will you do with the housing? So we feel that this lack of regulation is detrimental. So together with the Ministry of Construction, we are currently working on a draft act. And so considering our consideration, the Ministry of Construction is going to soon come up with the draft act, and we need to protect both the buyers as well as the developers. Thank you. Mikhail, please, over there. Mikhail Moiseev, Frank Media. Recently, we've seen frequent cases of internet being disconnected, particularly in big cities. But at the same time, in the whitelist, there are only 3 banks, which is far from all of the systemically important entities. Do you find this satisfactory? Are you negotiating with other government agencies than the banks? And what is the key obstacle? Is it in the position of the banks or the digital regulators? We do acknowledge that there is a problem, a very serious one, because being in the list of white websites means a very serious competitive advantage for the banks, which ended up being there, which definitely undermines the rules of the fair competition. We believe that all of the banks which have a license must be in such a list, and that is the kind of position which we are continuously voicing to the regulators. Natalia, please. Good afternoon. Natalia Kotovskaya, Pro Finance. On more than one occasions, we already heard about the concern over the expensive market-based mortgage, and people are really worried about it because the payments within such mortgage program are incomparable, even with the paycheck of highly skilled workers. And so the question is there any task being considered to make the market-based mortgage accessible for the salaried workers? And if so, by when? Why only for the skilled workers? Because our task is to make the mortgage available to a broader circle of people, to make it a mass product, a mass market offering, irrespective of anybody's individual qualifications. We believe that the key direction here, I shall repeat it again, reducing inflation, and on that basis to reduce the market rates. We've had such an experience in the past, but of course one must say that the market-based mortgage is not going to jump up dramatically much higher. Once we achieve the 4% inflation as a one-off thing, in order for the people to get used to it and also for the banks to be able to offer long-term loans at moderate rates, a certain period of time must elapse. So the last time we reached 4% inflation in 2017, and the market-based mortgage started developing broadly in 2019. So it means that in about 2 to 3 years, once we were able to stabilize inflation at 4% level. So we hope that inflation, we will do everything in order for inflation to come down to 4%, because that was the basis for the market rates to go down, and we hope that it will start happening this year. Mr. Zabotkin, please. Something that Elvira Nabiullina already mentioned, that against a very significant scale of the subsidized mortgage, the number of market-based mortgage loans invariably is going to be less than compared to when there was no subsidized mortgage offering. Are there any more questions, please? Nastya, in the last row, please. Good afternoon, Anastasia Boyko, Vedomosti. The central bank forecast that the GDP in the first quarter will grow by 1.6%, but the analysts do say that the current trajectory is below this forecast, both in terms of the inflation of the GDP. Is that true? Will we be able to see any decline in annual terms in Q1? And my second question is about the external conditions. Also, the central bank has a risk scenario covering the global scenario. How feasible it is, how probable it is right now. We are going to further update our assessment of the GDP growth once we receive a sufficient volume of data. Like I said, we'll do it in April, when we are going to have one of our core board meetings with regard to the rest of the year in general. Now, in as far as the probability of the risk scenario is concerned, we feel that if we consider it in terms of probabilities, we're not trying to assess its probabilities, but in the meantime, we see low probability in it. Mr. Zabotkin, I would like to emphasize that the actual data about the Q1 don't give us reasons to believe that the situation is developing outside of the forecast range for 2026. Well, in terms of the economic activity and price growth in Q1 is a bit lower than what the board of directors meant in December and February, but that does fit itself into the forecast ranges for 2026. GDP 1.5% inflation, 4 to 5.5%. That were mentioned in the February information. Well, colleagues, I guess that is the last question. Irina, please. Good afternoon, Irina Graltsova, Rembla, Personal Finance. Today you mentioned that in order to cover the state budget deficit, the government may increase the borrowings. Could you please tell us whether that might lead to the greater yield in the federal bonds and a greater need to spend on the part of the households? How probable this scenario is? Well, I was hypothesizing about the reduction, whether the reduction of expenditure is going to be, simultaneously followed by the lower deficit, and how, on the contrary, is going to be compensated in terms of the borrowings or mobilization of different income streams and so on and so forth.
So how, with that, the bond yields are going to change? Definitely will depend upon the volumes, but the market will make an ultimate decision about it. Mr. Zapotkin, please. Additional borrowings leave less room for the market lending to grow. So against all other things being equal, that would call for a higher trajectory of the key rate policy. Thank you. Dear colleagues, thank you very much, and have a very nice spring evening.